Right, welcome back, and joining me for a closer look at what's played out on the market scene today is Imtiaz Suliman from Sentio Capital. Thank you so much for your time. Imtiaz, of course, all eyes on trade talks between the US and China taking place in London. Is there anything new that we can expect there?
Yeah, thanks, Anaki. I think the market is hoping for some compromise from both sides in terms of the Chinese, some relaxation on the rare earth metals ban, and then from the US side, some negotiations around making sure China has access to the latest chips, the issue around banning of foreign students in the US, and how do they sort of find a way forward given the tariffs that were announced by Trump. So although we do have this pause that's in place, the big question is what happens after and at what level will the overall tariff settle at. So I think it's going to be very much a news-driven market until we get those headlines and see what comes out and whether we're making progress on the talks.
Yeah, all right. And just a quick brief comment on the China trade data, because I don't think there's really anything new here. In May, we saw exports dipping. Of course, you know the tariff story, but also even in China, the inflation picture there still quite soft. So nothing new there, right?
Yeah, pretty much the same trend in terms of deflation in China, a consumer that is still very weak. And if you look at it from a export data perspective, exports are growing more strongly than imports. So again, speaks to a weaker local economy. And if you break down that exports, exports to the US were down 34%, which was one of the lowest export years or months to the US in a long while. So it just shows that this tariff pressure is having a major impact on the Chinese economy, but also on overall exports out to the US. So again, China needs to stimulate the local economy, start getting the local consumption going, and rely less on exports to get the economy back to where they want it to be.
All right. Well, let's chat about some of the results that came out of the JSE. Let's start off with Omnia. I looked at those numbers, and I don't know, from a headline point of view, they looked uninspiring. You had revenue up 3%, headline earnings up 1%. But actually, interesting that the detail actually gave a lot of color and a lot of great performances and improvements within the business. How did you view those numbers?
Yeah, I think from an aggregate perspective, pretty much flat. If you look at the underlying businesses, mining and agriculture are doing much better. The one business that is struggling and has been struggling for quite some time within Omnia is the chemicals business. And they are restructuring that business, trying to right-size it and make sure that they have some profitable growth. So I think if you look at it, what it really reflects is the manufacturing sector in South Africa, which has been under pressure for a long time. And this speaks very much to that segment. But if you look at it, mining is growing quite nicely. They're gaining some market share and their margins have increased. So that growth is coming through. And then agriculture also had a better year, which I think they would also look to grow. And those are the two big divisions within Omnia.
All right. Before we get to your stock pick, PPC out with annual results, that top line softening, but really that's where the declines ended because you saw the bottom line more than doubling. I would have thought that the market would be impressed with those numbers, but the last time I checked, the share price didn't really quite move. It was actually trading a little bit in the red. What did you pick up in those numbers?
Yeah, I think the top line was challenged, as you mentioned. We don't have any big major infrastructure projects ongoing in South Africa, which is a challenge for them. But what they did very well on is on the cost side. So if you look at the EBITDA margin, that went from 12% to 16%. And it's very much a self-help opportunity that has come through. So I think they do have some growth plans with the likes of a new cement plant in the Western Cape coming online in about 3 years' time, which will be quite efficient from a cost perspective. And what PPC has really done is focused internally and not rely on the macro economy to sort of bail them out. And we saw that come through in this result. So dividend was up, the earnings were up nicely, and the cash generation was also good, with the debt levels down quite significantly.
All right. Well, Imtiaz, let us get to your stock pick for today. What are you choosing?
Yeah, I'm going with pretty much a steady bellwether of the South African economy, which is Shoprite. If you look at some of the peers that have reported recently, like a Pick n Pay and Spar, they are struggling, and Shoprite has really been the one that has been taking market share for 5 years now, and I think that's going to continue. They do have quite a good ecosystem in terms of the stores, the online platform, which is Checker 6060, which they're rolling out to ShopRite as well, and to the hyperstores. And then they've got supplementary income, which is advertising rebates, volume rebates, the fintech business. All of that bolsters their margin, which generates very good cash. And I think this flywheel that they're on will continue as the tough macroeconomic environment plays out. They're very well positioned to gain further market share, but also grow in this environment.
All right. Well, thank you so much for your time and for your insights on what has moved our money today, Imtiaz. Much appreciated. That was Imtiaz Suliman from Sentio Capital.